Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra. By now, most of you would have watched or at least heard about the viral video of an online meeting where an HDFC bank executive is seen snapping at his subordinates for not meeting targets and has been asking his juniors to sell about 75 insurance policies in one single day. Now, after the video went viral, HDFC Bank did suspend the officer in Kolkata, but the larger picture here points at whether such unrealistic targets are actually leading to cases of mis-selling of insurance policies in India. Joining in to discuss this further, I'm now joined by Mr. Hemendra Hazari, who's a banking analyst, and also my colleague Tina Jain Kaushal, who's the editor of Money Today. Welcome to both of you, and thank you so much for taking the time out for this discussion. Mr. Hazari, first up to you. Now, you've been observing this sector very, very closely over a long period of time. I wanted to take your, take first on this 75 policies in a day kind of a target that this person was seen asking his employees to do or juniors to do. Is that a usual target that is given to a bank employee? Mr. Hazari?
Oh, sorry. So these targets that are given are multiple targets are given to branch managers, and insurance is just one of them. They have targets for selling savings accounts, term deposits, and life insurance. A whole lot of multiple targets are given, and
Yeah.
depending on urgency, a day they will keep shifting and emphasizing whichever targets they feel that there is a shortfall. And today, if you walk into any private bank branch, you will see that the branch staff are under enormous pressure to meet these multiple targets that are given to them by the top management.
Right. So, Mr. Hazari, would you say these targets that are given to these bank employees, say, take in instance what this person is seen telling his juniors, 75 insurance policies, is this a realistic number to achieve? Could you help break it down for all our viewers that what would this really need to achieve? What would be needed to achieve this number? How many calls would an employee need to make? What is the time per user that will, be deployed for? And also, will it justify that a person is needed to understand what kind of policies are being given or extended to them by these banks?
See, firstly, selling an insurance product is not like selling any other bank product. It is a sophisticated product. You require to target a certain class and certain age profile of retail clientele. Therefore,
Yeah.
you should have mined the data, shortlisted your universe, see their income profile, and then start marketing it to them. So it requires a lot of time and effort and energy, because this you should really educate your customer on why the individual requires insurance. So it is a
Correct.
hugely time-consuming process, and depending on whom, because he was addressing cluster heads. Cluster heads means that each cluster head would have a couple of branches under them, and I think
Okay.
on that call some certain senior branch managers. So depending what is their type of clientele, but you require to educate your clientele even if they are educated, because insurance is a very difficult product to sell. But because of the premiums that agents like banks get for selling insurance, and because of the lot of perks also which are associated with it, there is huge pressure on bank staff now to sell insurance instead of selling their regular banking products. So it is a tall order. Now we do not know how many branches each cluster had under him, but it is normally a tall order to sell 75, insurance products per day.
Absolutely, it's a tall ask. Tina, could you come in over here and help our viewers understand why is exactly there so much pressure on bankers to sell these many insurance policies in such in a single day?
So, Sakshi, clearly banks are allowed to cross-sell products. They can cross-sell many products like PPF is there, mutual fund is there, insurance policies are there. But why banks are focusing on insurance policies? The one answer to it is high commission rates. When they sell PPF, the commission might be nothing. When they are selling mutual fund, it is around 0.5% that is paid to bankers. But when it is insurance policies, it is up to 50% of the premium that is paid as commission to banks. So clearly, it adds to their profit, and their profit increases when they sell these third party products. So if we look at the other income section of banks, it constitutes very high of the total revenue. It can be as high as 20 to 25%. So clearly high commission rates of insurance policies which is given to bankers, intermediaries, that is one of the reasons that so much pressure is put on bankers or
Correct.
employees to sell these policies.
Right, that makes perfect sense. You know, higher commission, greater profits, and perhaps that is the reason why these targets are set for the bank employees to sell these third-party products to their clients, to their customers. But Mr. Hazari, do such instances of relentless pressure really lead to mis-selling of insurance policies? Have you come across such instances, in your own study and your own analysis?
I have come across rampant mis-selling of life insurance in this industry. In fact, sadly, it is said in India that life insurance is not sold, it is missold because you're selling it to people who you're not educating. There is gross malpractices that have been taking place. The regulators sadly have taken a very benign approach to these companies who have been mis-selling. And I think this is all happening because regulation and the regulator is not enforcing punitive actions on these insurance companies. And because of the premiums being so high and the commissions being so high, it is very lucrative for them to sell it. And the penalties are so low
Yeah.
that they don't miss selling and even being charged penalties because it's just the cost of doing business. And this is a very sad situation which has taken place because of the privatization of life insurance in this country. The insurance is a very difficult product to sell. You have to educate the person. You can't just sell it off the counter.
Sure,
So it takes
sure.
time and effort to do that.
Sure, absolutely. Two very key points that you've mentioned here. The role of the regulators in such cases and the kind of penalties that are imposed on these banks in case they mis-sell these products to their customers. Two very key points. I will come to that also going forward. But Tina, I want to ask you about any kind of data if we have on the number of mis-sold policies, customer unfriendly policies. Do we have the number of complaints that have been sent to the regulators about such cases?
So the latest data we have is of 2020.
Mm-hmm.
There is insurance booklet on consumer affairs, which is shared by Insurance Regulatory Development Authority of India. So it clearly says that out of total complaint received in that year, around 26% were due to unfair practices. So these unfair practices clearly could be mis-selling of insurance policies. So it is as high as 26% in the industry. But these are 2020 numbers. But I'm assuming the figures must be around these figures only currently. So yeah, it is rampant, and it is around 26% of the total complaints received by the industry.
Okay, Mr. Hazari, if you could help us understand a little deeper, what are the kinds of mis-selling products that is done here? What could a user really end up with in such cases if not properly educated like you've been talking about?
You see, I have known of instances, of course, we don't know in this case what exactly has
Sure,
happened,
sure.
where customers want to open a bank deposit and they're completely missold. Actually, the bank staff do fraud. They deliberately put their money into an insurance product. And the customer believes he has opened a savings account or he's opened a term deposit. So
Okay,
only when the premium comes in that they realize there's something wrong. And then when they approach the branch, they realize that they have not got a bank deposit. They have got an insurance policy where they have to pay premiums for about 15 years. In other cases, I've come across even students whom you cannot sell a policy to because they are not earning.
okay,
The banks have forged their age, forged their income proofs, and this shows a total collapse in underwriting standards, even of the insurance companies, because there has to be a verification done. But the entire process is so corrupted to achieve your targets that you have such practices. And you see, very often you have to tell the customer because actually the best life insurance product is one where you don't get any of your money back. Those are extremely,
absolutely.
the much lower, but that's where the commissions are much less. So they tend to sell these policies, which is wrapped around an investment product,
Sure.
and that in most cases the premiums are very high, and a huge chunk of that first year premium goes as the commission. So normally these agents prefer to sell those policies. And this is the whole issue. The issue was insurance was opened up to the private sector to increase long term savings in the economy, which would go towards infrastructure. It was to increase penetration of life insurance penetration to GDP. But sadly, you have seen ever since they have come in, the insurance penetration really has not deepened so much. And there has not been scale investments into infrastructure because a lot of it has been deployed in the stock market. So the original objectives of opening up insurance to the private sector, in my opinion, has not been achieved. That has been achieved at a huge cost because in the initial years there was such massive mis-selling that there was a huge to the customer saving went and invested the monies into it. So, in my view, this whole thing has to be reviewed. Very stiff penalties have to be put, like they did in the United Kingdom, where the
Yeah.
regulator, over a couple of months, they issued ads in the newspapers, in the media, asking customers to record their complaints. And then a very hefty charge was put on these banks to such an extent that they practically now they've desisted selling insurance. That has been such a huge penalty. But sadly, in this case, we see that both our insurance regulator and the Reserve Bank of India have taken a very benign attitude towards such mis-selling.
Absolutely. That's a very, very pertinent point that you have made. In current cases, there are many instances where a person may have just gone to a bank to open a simple savings account, but has been misguided and missold a policy. If these cases are actually coming to light, then the regulators really need to step up and actually look at these cases if they are in number. Now, Tina, help me understand, what does one really do if a policy is missold to you? What is the recourse measure? Now that we understand this is a huge problem, several cases are being seen over here. Mr. Hazari also pointed out that he's been seeing these cases over a long period of time. The regulators have taken a benign approach. There are no stiff penalties, which we definitely will urge regulators to really look at right now. Before you answer that, I'd also ask all our viewers who are watching us on YouTube as well, do mention in the comments below in case any such instances also happened with you or your known people, that where a person has gone for a particular thing to a bank, but something else has been sold to them, a missold policy, a missold investment product. Any of that instance, if it has happened with you, please do mention it on the comments below so that we can discuss this further as well. Tina, what is the recourse measure for a consumer who has been, who's now holding a missold policy?
Sakshi, in every insurance ad we see there is a phrase which is called insurance is a matter of solicitation, which clearly means that insurance should be asked for and it should not be sold. But as we have discussed, there are so many cases of mis-selling of insurance policies. So if you have been the victim of insurance policies, there are several ways, several recourse measures to get your money back. So one of the first things that you need to do is to look whether the free look period is still on in your policy. So according to IRDA guidelines, you get a free look period of 15 days in which you can cancel your policy if you think it is missold. And the beauty of free look period is, without any questions asked, insurance company have to cancel your policy if it is missold to you. So company cannot ask you, or to give, the onus is on you to say that insurance has been missold to me. But only fact you should know that in this case, under free look period, you might be deducted some charges like mortality rate of that period, or some other nominal charges. But if that free look period has expired, what if the 15, 30 days, whatever your insurance company gives, has already expired? What is the second level of measure that you can take? Then in that case, you should reach out to your insurance company. You should write what has happened to you. You should give a detailed email under which on in which branch the incident happened, or which agent you were involved with, and you should directly contact with your insurance company. Then again, you have to wait for 30 days. If you do not get satisfactory answer from the insurance company, then then you can go to the third level, which is IRDI level, the insurance regulator level. So they have set up the system called insurance bharosa system, under which you can register your complaint. So this is the three levels which you can use to register your insurance
Sure,
complaint.
sure.
First, check the free look period. Otherwise, go to the insurance company directly. 30 days period is there. Otherwise, escalate it to the regulator. But you have to be proactive because after 15
Sure.
days, the onus is on you to prove that the insurance has been missold to you.
Sure. Mr. Hazari, I want you to come in on this. Anything that you would want to add to the kind of recourse measure that consumers have? And in case one is missold a policy, how does one, personally identify that, of course, one instance that you mentioned that, once the premium was deducted, that's when a person really recognized that, there is something wrong. But what if a person did go for some kind of insurance but is not getting the correct insurance product for which suits their own needs? What happens then?
You see, it's very difficult after that 30 days period. As I
Hmm.
said, some they don't know what they have been sold, so they wake up after 1 year. So by that time, it is too late. So
Yeah.
if you're within 30-day period, your chances are very high. And if you're woken up very late, you can always approach them. But at least from some of these customers that I have personally have knowledge of, the companies are very reluctant to acknowledge any kind of mis-selling, and it's only when you try to directly approach the regulator and you CC them, or you approach the media or analysts like me and I publicize it, that these companies start waking up because of the negative publicity,
Hmm.
and then they will to settle it with their customer. But sadly, at least in my experience, I don't think these companies are being very proactive in addressing missold policies, because
Yeah.
in India, because it is so difficult to sell and convince people, they only can get their premiums by mis-selling.
Hmm. Also, Tina, I wanted to understand, you've been talking about this three-way measure that consumers can have, but is the recourse measure different from, when one buys insurance product from a bank, vis-a-vis when one gets this insurance policy from an insurance company?
So till some time back, banks were not held responsible for selling policies if it is missold. But in 2017, RBI actually notified that if a policy is missold to a person, then the person can go to the banking ombudsman and register a complaint against a bank. So there are two ways. If you have bought it directly from an insurance company, you can go directly to the insurance company and register your complaint. Even if you have bought from bank, you can still go to the insurance company, and you should go because it can be a quicker measure to resolve. But if you want the case to be against your bank, or if you want it through the banking channel, then in that case you have all right to go to the banking ombudsman. They are under this purview as directed by the Reserve Bank of India.
Hmm. Okay. Tina, also, what is the current regulatory framework? Mr. Hazari has been pointing out that, both the RBI and IRDI have been benign in such cases with low penalties currently. Could you detail for us what is the current regulatory framework in place to deal with such practices?
Currently, Sakshi, banks sell multiple policies. So under the current law, they can sell as many as life, health, and other kind of insurance policies. Till some time back, it was only one insurance, one general, one life. Then it was increased to three general and three life insurance policies. But now they act as brokers and they can sell multiple policies. And the purpose to bring it in was that there should be ample choice should be given to the customers so that no mis-selling happens, because when you
Sure.
have larger choice, there is no one product that you are compelling. So banks are largely working under the framework of corporate agency license they have from the insurance regulator. And under this license, IRDA says clearly says to all these intermediaries, to all these banks, that insurance policies should not be compelled on the customer. And if it is compelled, it, or we can say missold to a customer, IRDA can step in and take the measure. But under the corporate agency license, it is clearly written that you cannot cannot compel. But we know that it's not practiced when
Sure,
it's happening
absolutely.
on the ground.
It's not practiced at all. But Mr. Hazari, now what do you really expect the regulators to take as an action after this instance has come to light? This has been happening. You've been noticing these instances now, and you've been saying that the regulators have been benign. But time now to really step in now that this thing has come into light for most of us, and we are now aware that such instances are happening. What would you expect the IRDI to do now?
See, in this particular case, we do not know if any insurance policies have been missold. Let us be very clear. There is
Sure.
absolutely no evidence in this video
Yeah.
that they have been missold. We just know there is a very toxic culture, which I believe is there in many private sector banks when it comes to meeting such targets. The issue is what has India done since its inception? So there's been a massive loss of customers of their savings. That has been as a percentage of GDP. Somebody had calculated it's quite significant earlier. IRDA has not removed any CEOs. They've not removed any underwriting heads. They've not heavily fined any of these insurance companies. So it appears to me that for much of its existence, IRDA has served the interest only of the insurance companies and not that of the life insurance customers. And that is the sad fallout of privatization, is that these regulators are effectively captured by these insurance companies, and therefore that is why you do not see any stiff penalties being put. You do not see any removal of any insurance company CEOs, because when you have such large-scale misselling happening, you expect the regulator to take very stiff action. But insistently, I have not seen this in the regulator. And most unfortunately, all this will only fall on innocent customers who really have to pay the price.
Right. So on the innocent customers point then, Mr. Hazari, what points would you ask the investors to keep in mind while they're speaking to a bank executive, visiting a bank for some purpose, and they're actually told that, you need an insurance policy? What should be the, points to keep in mind?
I think they have to first study it. You should not take any hasty decision. They first have to understand the product, because sometimes it's very difficult even to understand what they are being sold. So to take their time and to consult people. I mean, today when a lot of information is available on the internet, you can always put it. So it cannot be a rush job. So even if somebody wants to sell 75 policies a day, I don't suggest that anyone, rush in to walk into a bank and immediately buy an insurance product, because you'll take a couple of days to understand the product and to consult others. It will give you any insight into it. So it is a product which you have to consider for some days, think about it, and then if you require the kind of product, then by all means go ahead with it.
Absolutely. Well, out of time on this edition. Many thanks, Mr. Hazari, and many thanks, Tina, for being with us on the show and giving us all those insights that are very, very important for all our viewers to keep in mind in case such an instance happens to them or to someone who's known to them at this point in time. Dire situations, and after this discussion, one point definitely that the regulators need to step up and get down to understand what is really happening on the on-ground level, on the bank's level, on the insurance company's level, and also make room for tougher actions in case such large cases of mis-selling of products is coming to light. And on the other hand, also stiffer penalties are needed at this point in time so that one can curb such instances going forward as well. Many thanks to both of you for sharing all these wonderful insights with all our viewers. Always a pleasure having you with us, Mr. Hazari, on Business Today TV. And thank you so much, Tina, for giving us all those data points, which will definitely help all our viewers really get down to the details of all of it. Thank you so much. And with that, we wrap up this special edition. But do stay tuned onto Business Today TV to catch all the updates from the world of business and stock markets.
With the Nifty just a couple of hundred points shy of its lifetime high, India Today Group